Hello and welcome. Indeed, I am very, very honored and happy to have the RBI governor with us, interacting with students from IIT, St. Stephen's, Delhi School of Economics, LSR, Sri Ram College of Commerce. So you've got a tough bunch here. Used to be like that a few years ago, right? Well, not
many
too
years
long,
ago.
not many years. But tell me, what does it feel like? You've been now long enough as the governor, you from a academic, pure academic, to a pure practitioner. Are you enjoying it?
Yes, I mean, I transitioned for a little while
yes.
into another
Yes.
multilateral bureaucracy. This is a domestic bureaucracy.
Unilateral.
It's a very interesting situation.
Experience.
First, because of where the country is in.
Yes.
It's certainly work in progress. We've done a number of things, but there's a long way to go.
Right.
And one of the nice things about the Reserve Bank is you can actually do things. As opposed
Independently,
to,
yes.
As opposed to advise in the case of the IMF,
Right.
preach in the case of academia, here you actually
Have
making
to
things happen.
put your money where your mouth is.
Absolutely.
Right, and that's a lot of pressure, but more enjoyable, is it?
Satisfaction.
So it's more
At the end of the
satisfaction
day,
at
when
the
you
end,
go
yeah.
home, some days you feel frustrated,
Right.
but many days you feel we actually accomplished something here.
Yeah. You know, one of the big advantages, I'm sure all of you will agree, is that finally we have a globally respected professional as head of the RBI, not a career bureaucrat. There were so many rumors that you may have been asked to go to the Fed. Now there's this big rumor that you're being asked to be the first chairman of the BRIC Bank. Is that true? Have you been asked?
Well, let me put it this way. First, on the previous governors, I think they were all very highly qualified professionals. If I can say this, I mean, I think the RBI has been one place we've sort of not made mistakes in terms of people we've
Right,
sent there. They've
right.
been people of excellent quality. You know, there's always rumors, and I don't know where they come from. I think it's wishful thinking on the part of some people. They'd rather see me somewhere else. Let's see.
But nobody's approached you to become
I mean,
chairman.
it's not clear that for a
this-
bank, the BRICS Bank is actually a bank where you have to make credit decisions and you have to evaluate projects and so on. It's something that you want somebody seasoned who has some capacity to make those decisions.
Who a banker, really.
A banker.
Right, right. But I think everybody will agree that your global reputation has helped India and the Reserve Bank with you being there. Don't you agree? And a professional, it kind of, I know there have been some others like Bimal Jalan, who's an economist and a great professional, but there have been many career bureaucrats, which perhaps there should be a change, which you have initiated now?
I don't know. I mean, there are times when you need a substantial amount of reforms. An outsider is good at such times. There are times when you need deepening, working it out, making sure that the trains run on time. Those kinds of situations are perhaps where an insider might be more effective. So it really depends on the situation.
Yes, but I suppose one thing as a professional, you've had global respect, but also you're fiercely independent, and you can be. You can keep you many options in life, right? So you've been talking quite openly and toughly about crony capitalism in India and the bad billionaires and how companies and stakeholders and shareholders may lose out, but somehow the promoters and owners never seem to lose out. How bad is it really in India compared to other countries?
Well, it is a phase that every country has to go through. First, we have plenty of good business people. We have plenty of good billionaires. What you have to worry about is a few people muddying the pool and making it more difficult for everybody else, including the people who have yet to scale the ladder, because they increase the cost of credit, they increase the cost of access to financial services, and so on. What we've been trying to say from the Reserve Bank is debt is a sacred contract. It always has been a sacred contract in India. And if you borrow, you have to repay it.
Really?
Really. And you know, the problem, of course, is with some of these people,
Thousands of crores
it's a suggestion. If you have the money, well, think about repaying, and if you don't have the money, well, suggest that your bank takes a haircut.
Yeah.
It's contrary to the whole principle of who takes risk. The promoter has to take risk,
Right.
which means he gets wiped out in bad times. It's not
Yes.
that he starts negotiating at that
So,
point.
is that going to change? Are you going to change that, and how are you going to do it?
Well, there are a number of factors that I think will change this. First, there's a whole lot of public attention to concerns about crony capitalism, and failing to repay debt is one aspect.
Right.
Of course,
But
you know,
we've just seen in the last 2-3 weeks certain examples of individual companies getting a little bailout. I won't go into the
I
names.
don't think as yet. I think those, I mean, there are always suggestions floated around.
Right.
I think the public policy angle has to be looked at by the government. Am I better off sort of allowing this company to go under, or is it so critical that it requires state assistance? And you know, the United States helped out GM and Chrysler. It's not unthinkable. I'm not also saying that the United States
This
always
is
makes the
perfect,
best
yeah.
decisions, but it's not unthinkable. The key question is it made in a dispassionate way
Dispassionate and
about
arm's
whether the
length.
public interest outweighs the cost of sort of distorting capitalism?
Many people say that you should perhaps bail out industries as a whole, but not individual or companies within an industry. If an industry is going through a bad time,
Right.
yes, it's fine to give them a break in some way or the other. But if an industry on the whole is doing fine, but one company is doing badly, then it's wrong to actually target that company. Like GM and Chrysler automobile that was in a disastrous state in America.
Right. I mean, it really depends on what the cost of not taking action would be. Sometimes what happens is that you restructure in a much more efficient way. We have certain industries going through bad times, and our constant point has been, let us put them back on their feet in a more sustainable way. Let us recognize that we made mistakes, that the capital structure may be inefficient for these industries today, which means everybody has to take a hit in a fair way. Then let's go on. If that happens, I don't think that's a bad thing. Mistakes in a free market system, we make mistakes, but we have to look beyond that.
So a lot of the accusation of crony capitalism has to do with public sector banks. 75% of our banks are public sector, and kind of political pressures, crony capitalism at its height. What can you do about that? Any chance of privatization like ICICI, what a wonderful institution it's become after becoming more private. Any chance of that?
Well, first, here again, it's not clear how much is crony capitalism, how much is mistakes, right? We've been through a period of downturn, severe downturn relative to what we were doing. 8-9% growth to 5% growth is a big change. We've seen the world economy slow down. So decisions that were made in 2008 with very little capital, with a lot of promise about revenues, with a lot of promise of effective governance, ex-post didn't turn out. So there were mistakes that were made. Very hard to describe what were true mistakes and what were through influence, which you're talking about. So my personal instinct is the majority were mistakes rather than influence, but not to deny the fact that there were situations of non-transparent lending and so on, and we have some evidence of that more recently.
Yes.
That said, given that that kind of situation, we need to figure out how we can clean up governance to the extent needed in the public sector banks. There are some very good CEOs there. How can we make every CEO like the ones at the top? And for that, there are a number of ideas that are now floating around in the public realm. Separating MD and chairman, getting better boards that are more focused on governance, having better pay so that we can attract the right talent to these public sector. By the way, there is a misconception that the public sector banks are typically cheaper in terms of expenses than private sector banks, because after all, we underpay. Not true. In effect, the expense structure is sometimes higher than private sector banks. Really? So there's enough to do in terms of remedying what's already on the ground with some, moderate changes. Of course, as you know, the government is looking at this in a much bigger way in the beginning of the year with this conference. And let's see what comes out of it. But my sense is there is widespread agreement that we need governance reform, that we need to figure out how they can also perform better in debt recovery. We need to figure out how they can increase capabilities. There's a whole period of hiring freezes in the public sector banks. And a lot of people, there's a missing middle in some sense, for which we need to hire or we need to increase capabilities at the lower levels much faster.
But it sounds like the old story that we will improve the public sector, we'll make it more efficient, which I've heard for 35, 40 years. And it just doesn't happen because you can improve public sector, you can't improve our politicians who will interfere, phone them up, threaten and, do all kinds of things because they feel they own it. I remember when we first started on television and we were on Doordarshan, we used to go and see the I&B ministry once a week, if not twice a week. Now, because we're private, we go once in 2 years, even in fact less. When will it happen that your public sector bank chairman and managing directors will not come to Delhi every week?
Right. No, it is an issue of, is there, generally speaking, too much intervention in the policies? And governments vary in how much that happens.
One worse than the other, that's
some worse than the others and some better.
Very few
better. But I think that is an issue that has to be addressed very squarely. How much do we...
No chance of privatization.
I don't know.
Because we're going back to early 70s and Indira Gandhi, which we are suffering today.
I think there are lots of possibilities ranging from at one extreme privatization across the board.
Or disinvestment.
Well, disinvestment is not quite privatization. It's reducing your stake. But full privatization where you empower the boards completely and so on.
Right.
To state ownership but empowering the boards. To staying where you are. For example, Singapore has state-linked banks, where the state still has has still the largest ownership, but it's not the majority ownership.
Right.
So you can do a lot of which looks more market-oriented in those structures. Variety of structures possible.
Any hope of that happening?
Is on
Would
the
you
table.
like to see that happen?
I think everything's on the table right now. My sense is regardless of what you actually do, improvements in governance are without any question what you have to start with. Even if you go towards the end point of privatization.
That's like, what's that, motherhood and apple pie or something? That improvement in government everybody wants. How do you do it?
So there are, clear things to do to get us away from where we are now.
Right.
Lengthen the term of management, right? Today you can get somebody who comes in for 1.5 years. That's no time to do anything serious, so lengthen the terms. The government is on board on that already. Right. Separate the managing director and chairman. Today the chairman and managing director is a complete sort of boss within, with limited checks and balances within the firm. So improve the quality of the boards, bring more professionals onto the boards. The Nayak committee has suggested setting up a bank board which will nominate people separate from the government.
Do you believe in all this? It'll happen? I mean, it'll really make a difference?
My sense is that there are countries where we have public sector banks which are doing quite well. France is one example.
I'll tell you something. Yeah. It's like BBC is independent in England. Why can't Doordarshan be? We've been waiting for 50 years.
No. So you're saying that it is those countries have a different system, a different ethos, and it won't work.
Yeah. Don't you think so?
I think we have to move. Let us start moving where we can, and then see where we end up. Now, we may find this doesn't work. We may have the political consensus to move much further. Let us see.
Much further meaning privatized to some extent.
My personal view is a mixed system is not a bad thing.
Mixed meaning?
Mixed meaning having some public sector, some private sector.
Like it's 75-25 now. What would you like to see?
I would like to see something which is a little more evenly balanced.
50-50.
But I think the public sector has to be allowed to compete.
Also.
It has to be allowed to compete by freeing it to get the best talent, to take decisions in the commercial interest. So you do a bit of both.
Yes. Free the public sector, let it work, and also privatize from 75-25 to 50-50 or something like that.
Let's see what happens.
Well, we're hoping that you'll do that sort of thing. Any questions on crony capitalism? There were some issues, crony capitalism, public, here, gentleman on the left in the center there.
Yes, sir. Sir, in your book that you co-authored, Saving Capitalism from the Capitalist, you've argued about this idea of dismantling relationship capitalism in the first place. And we keep seeing these allegations come through from various political fronts about whether it's the Adanis or the Ambanis, that there is some sort of a crony capitalistic attitude that still exists within this country. Why do you think that this exists as of now when we do have, a sort of a public awakening to the extent? And how do you think the banking sector as a whole can prevent this kind of lending that happens and then dismantle the structure?
See, first, the fact that there are some very rich people doesn't necessarily imply crony capitalism, right? That people can get rich by running a more efficient enterprise, by thinking bigger, by building, taking more risks and so on. Second, I think the key issue is, did you get rich by getting the appropriate permissions where somebody else with your capabilities could not have got it, or somebody better was kept out? Now, countries progress. They start initially, in many situations with a fairly small elite. And then the elite expands. As more people get education, more people get... The important thing is, at that point, the system should be willing to accept those newcomers, so that they also mount the ladder. It shouldn't withdraw the ladder at that point. Countries that withdraw the ladder get stuck. This is the so-called middle income trap, something that Mexico for many years was allegedly in. And we have to make sure we're not in that trap. So what I think we need to do, and this is the language that you hear nowadays across the board, we need to make it easier for people to start enterprises. We need to make it easier for them to get credit. So small and medium-sized businesses should get credit more easily, which means improve your frameworks, improve your institutional structure. So influence will always be there in any society. You can see the United States, there's plenty of influence there. Why is it that two families have dominated the presidency over the last few years?
Dominate again, apparently.
Perhaps dominate once more. So that doesn't necessarily mean the system is biased against the others. It is, people have gotten familiar with those. What we have to do is make the system more accessible to everybody. And that's what we need to work on. If you do that, the crony capitalism itself will die out and be replaced by a more free enterprise system.
Actually, just carry on from that question, the few that have crony capitalism, the real estate companies, the many large corporates that are now badly in debt, it's difficult for them to grow any further because they are so highly leveraged. So then you have these new... I loved your speech at FICCI, I really did, except I felt you were a little offhandish about new media, Twitter, Facebook, e-commerce. Now, e-commerce are young kids like these guys. I'm sure most of them are thinking of that. And they don't need no politician, they don't need no Reserve Bank governor. They will show you the way. No crony capitalism. Isn't that a welcome thing?
Absolutely,
young entrepreneurs.
Absolutely. I was not in any way disrespecting these businesses.
Now you're saying it in front of these youngsters.
No. Read my speech or hear my speech. No, what I was saying is, relative to the inventions that happened at the beginning of the 20th century, the motor car, the aeroplane, telephone, right. These were enormous inventions compared to Twitter and Facebook. 140 characters sending around your tweets is interesting, is fun, but does it compare with a motor car in terms of innovations that set us forward? I mean, call me an old fogey, but I think the motor car wins out. So in that sense, I was saying that it should not be surprising that productivity has not increased as much as perhaps at that time in the 20s and the 30s. And therefore, it led to a long sort of discourse in which I said maybe productivity, at least for now, is
I think what everybody will slightly object to, including me, is that to try and use only Twitter and Facebook as an example of the new technologies. They're just their side. Yeah. There's Internet of things now. There's e-commerce, and e-commerce. I just found a lady housewife, 45, 50-year-old, who couldn't ever go into a supermarket because she didn't have the connections. She is now selling 20 crores a year of saris from Surat on Snapdeal, Facebook, and Amazon and Flipkart.
No.
I mean, the amount of it's a platform, it's a supermarket in the sky for anybody. It's creating employment. But will we as India allow it to become Alibaba, or are we going to stop it?
So there are tremendous possibilities, and I see that, and I understand. I mean, your example is for somebody to be able to sit in a remote area and sell to the world based on this kind of technology is wonderful, and we should encourage it. Right. In terms of what we can do to encourage that kind of thing, we certainly have to recognize new technologies when they come and make adjustments for the fact that they operate in a different way. Now, a classic example was a little bit of a tiff we had with Uber, where they were using a way of bypassing our regulations to conduct transactions overseas, which were in violation of a few regulations that we have. Our point was, look, we understand the problem you're trying to solve. We're willing to work to try and solve that. In fact, we have some solutions which are coming up on doing low-value transactions without too much janjat, as they call it. But the point is, you can't violate regulations. If we are a country which is going to turn a blind eye to a violation of regulations, no matter who you are, then we don't have rule of law. And one of the things we need to do to avoid the crony capitalism is have rule of law. So our point was, obey the regulation. We'll work with you to fix it, to make it more useful for what you're trying to do.
That's great to have a positive attitude, because you don't find that generally. You just say, look, shut down, but you're going to change or fine-tune regulations so that it becomes in tune with the current new technologies.
Absolutely.
Okay, that's great to hear. So in that context, anybody here planning to go into e-commerce and into the new, here's a young man there, yes.
My question is not exactly related to e-commerce, but to a more important topic of bitcoins.
Bitcoins.
Nothing more important than e-commerce.
No, bitcoins is fascinating.
And reading your book, Fault Lines, it comes out as you somebody who is not pro-government intervention. Being from the Chicago School of Thought, you propagate more free markets. So I want to know, and bitcoins has specifically very good advantages for a developing nation. And so I want to know, what is your view as a regulator on free banking and having more of equitable currencies floating in the market?
See, I think we're still watching the evolution of these kinds of currencies. One of the problems that we envisaged with Bitcoin, one of course was the securities issues, and you've seen that they're not as secure as people thought they were, and there have been stolen Bitcoins and so on. But the second issue was the fluctuation in value. For money, you require something which is a stable store of value, and something that fluctuates so much is less effective in use as money. There are some lessons to be learned from the technologies that Bitcoin has employed. Some of them are useful, some of them are worrisome. And we have to see how we take on board such technologies. I have no doubt that down the line, we will be moving towards primarily a cashless society, okay? And we'll have some kinds of currencies like this which will be at work. For us as the Reserve Bank, this may happen maybe 10, 15, 20 years from now, but we'll have to figure out how we make money, because the way we generate most of our revenue is through forms of seniorage. People are willing to hold currency free of interest, and that's how we make money. And but we'll figure that out. But I think that these virtual currencies will certainly get much better, much safer, and over time will be the form of transaction. That's for sure.
And India will adopt them at some point. You're not going to reject them out of hand.
You know, in a sense, credit cards are already performing some of that role. The amount of rupees that flow through your hands, I presume, are far less than used to before credit cards. Yes. And so this is going to go all around. We're going to have near-field contact devices. You just tap and go. I mean, all that we want to permit.
You want to permit?
We want to permit. I mean, we're not saying we're going to lose money, therefore we won't do it. We'll find some other way of getting money. Maybe government will fund us eventually.
Oh, no, that will be a nightmare. Okay, coming to government funding. Sorry, you had a question, ma'am.
From that, and I was, what happens when there is an absence of government bailout guarantee, and then do we enter into another crisis? Do we modify our expectations? What happens in the long term in such a situation where there is no guarantee that the government will bail you out?
Bail us as the Reserve Bank or bail banks out?
No, banks out. So,
well, I think many in the West now feel bad that their banks had to be bailed out, which is why they're trying to constrain their banks even more to make sure it doesn't happen again. I think that we have to try and reduce the risks in financial systems, which is why one of the objectives of a central bank is financial stability. Now, can you say never? Will some entity not go down ever? I think if you're in such a fail-safe system, you're probably taking too few risks. Yeah. So we have to allow for some failure, but not systemic failure. How do we prevent systemic failure? That's what all of our central bankers meet every 2 months to try and figure out. So it's work in progress.
So is a systemic failure coming? You 6 months ago you said it might come. There'll be a bubble.
Well, again, what I said and what was reported was a little different. But what I said was there's a higher risk of volatility as we exited the very accommodative monetary conditions that we have. There has been a lot of money that has flown in search of yield to emerging markets, to junk bonds, to a whole lot of risky instruments. And as interest rates start picking up in the core economies, you will see some of that money flow back. And the question is, when it flows back, are there big asset price changes, and who's sort of left exposed when those asset price changes occur?
So you're really saying that countries like India are more susceptible to this volatility?
I mean, emerging markets are typically susceptible. I like to think that we've made major improvements since we experienced the last bout of volatility in July of last year, July, August of last year. We have more reserves. We have a much smaller current account deficit. Oil is very helpful in this regard, and we'll see an improvement going forward in the current account deficit. And inflation is lower, so our currency has more respectability because the inflation associated with it is significantly lower. These are all, and tie that finally to the fiscal consolidation part the government has, and hopefully we're at the beginning of a period of stronger growth. So put all that together, we look different from the other emerging markets. I am hopeful that after an initial bout of volatility, if the world is seized by volatility, we will come through and people will start putting their money back.
But don't you feel that for money to come to India, the story has to be a good story, and our growth is appalling, and people are beginning to wonder, can India really do it? And in that sense, if I may be harsh, did you miss the bus a little bit? Do you regret not having lowered interest rates the last time? Because oil prices crashed, inflation rates are down to near zero, and WPI, I know you go by CPI, which is a smaller index, but it is the world norm. If you could rewind.
No, I don't think we've missed any boat. So you're
because you couldn't forecast oil prices going down. That was tough.
No, but we've seen some oil price
trend, yeah,
fall already, and one of the key concerns everybody should be asking is how long is it going to stay low?
Yeah.
Because at some point,
gosh, you're a conservative.
People are going to. No, that's my focus is not on oil prices.
But it's helping our inflation rate come down.
It's helping, and what we have to do is, once we are sure that the disinflationary process is well underway, we will have the ability to be more accommodative in a sustainable way. So that's the message I've been sending, that we don't want to flip-flop back and forth. Okay, this month's inflation was 2%, therefore I'll cut this much. Oh, it went up to 5%, maybe I should increase this. That's not how a central bank operates. It takes a view, and unless things change dramatically from that view, it proceeds on a process of either accommodation or tightening. And that is what I'd like to see happen.
But haven't things changed dramatically now? Hasn't the process started? I mean,
See,
aren't you convinced of that?
Yeah. I'm enjoying not to comment on monetary policy in between meetings. You've read our last statement. You read the next one.
Very sensible.
and,
Never answer the media. Correct. I agree with you. Sambaj Raj from Sriram College of Commerce.
Good afternoon, sir. So, firstly, what factors do you see as responsible for the fall in inflation? And how far do you think we will have to be looking with respect to the fall in interest rates? I mean, how much weight will we have to make?
Right. Ala Saifi. Yeah.
Good afternoon, sir. Sir, I'm Al Sefi. My question is, what percentage of inflation do you think the central bank can actually control in terms of policy making in the long run, so that's sustainable?
Okay. Where are you from, both of you?
Sir, I'm from IIM Ahmedabad.
IIM Ahmedabad.
Yes, sir.
Okay. Well, both are very good questions. Look, what we are trying to do is work with the forces. There are a number of forces at work. The fiscal consolidation that the government has been engaged in has helped curb demand somewhat. Okay, so actually, let me step back one step further. What is inflation? But the difference between demand and supply. Okay, higher demand relative to supply means prices have to go up. Okay, that's economics 101. We have been in a situation where, for a variety of reasons, supply has been more constrained, particularly of food, but also of other elements, including services. Services inflation has been quite high. Demand has been strong, partly because of fiscal expansion, which we had post-financial crisis, and a monetary policy which was very accommodative, right? And we also, had some income redistribution, which allowed people at the lower end, especially in rural areas, to express more of their consumption preferences. That also, helped demand. So these three things have been working. And the question is, if supply is not responding enough, what do we do? Well, one is augment supply, but supply augmentation takes a fair amount of time. And so what we have to do is constrain demand. And therefore, fiscal consolidation has been important. Monetary tightening has been important. Now, that is working through. Now, how much is each element responsible is hard to say, right? The global environment has also been cooperative. Remember, food prices world over increased in 2008, right, but since then have been flat and now have been coming down slightly. Oil prices have been cooperating very much because they've been coming down more recently. So a lot of things combine. Where monetary policy is most effective, of course, is in the interest-sensitive segments, whether it's interest-sensitive consumption, people borrow, they look at the EMIs, and therefore curtail spending if they feel that interest rates are relatively high, as well as investment. My own sense is investment, we've been, we haven't operated very much there because investment has been quieter, partly because of the governance environment, whether you get permissions, etc., partly because demand itself outside as well as inside has been relatively weak. So with low capacity utilization, people haven't invested as much. So where we've had the most effect, to my mind, is in consumption demand. That has, interest rates have helped there. Over time, as we get to an environment where we believe inflation is much quieter because of all these effects that are happening, we have the ability to cut interest rates. And so what we're waiting for is when that happens.
I know you don't want to talk about monetary policy, but things are better than they were 3 months ago?
1 month ago, when we announced policy, we said they were better than 2 months before that.
Are they even better now?
Well, that I can't say.
You can't even say if it's better. Well, you just said that oil prices have come down, food prices have come down, commodity prices.
What I can say is in general, we have been helped by the external environment, and we have to just gain the confidence that this
right.
is here to stay.
One remarkable thing is that how you manage to resist pressures, and there must be pressures from the government. But in this case, it's a little upside down. Governments normally want you to control inflation because inflation, from all our surveys, is the single biggest politically damaging parameter in an economy. So governments want you to control inflation. Now you want to control inflation, they want you to boost output. So do you sometimes feel, look, if all these pressures come, I want to be independent, but what do I really want? How do you distinguish what you really want from pressures?
No, look, as a technocrat, I have an objective which I keep trying to say is not my objective, is what I think, as you said, governments want low inflation. And to my mind, the best way we can aid growth over the medium term, not over the short run, but over the medium term, the best way we can aid growth is by keeping inflation low, so that interest rates will be low, so that people can buy whatever they want at low interest rates and people can invest whatever they want at low interest rates. How do I get there? Well, there's always the temptation to say, okay, we're almost there. Why don't you guys let go on interest rates, cut interest rates? Of course, if I cut interest rates by 500 basis points today, there'll be a boom in consumption. There could be a boom in investment, keeping in view this boom in consumption. But then what happens to inflation? Because we haven't fully solved the supply side problems, we probably will get more inflation over time. And then we'll have to start this whole process again. So essentially what I've said to anybody who listens, and a lot of people do listen, that look, let's do this in a sustainable way. And it's not that the RBI is against growth. It is for sustainable growth.
Sustainable.
And our horizon is sometimes longer than those who want us to cut. They're seeing next quarter's profits. And we're saying, let's look at next year and the year after and 3 and 5 years down the line, how profitable you are.
But isn't it, in a nutshell, real interest rates are too high right now?
Well, it depends on how you measure real interest rates. A lot of people do the I think the incorrect approach of taking what somebody pays and subtracting out the inflation rate and saying that differential is the real interest rate. What, say, a steel mill pays is composed of 3 things. Now I'm going to give you my economics lecture.
Really, yeah.
It's the risk-free rate, plus the term premium, plus the risk premium. A lot of what the steel mill pays over and above the 8% that is the treasury rate is a risk premium for how risky they are, including those guys we talked about in the beginning of the talk who don't repay their loans. I mean, if you don't repay, that's 100% loss to the bank. And it's going to charge you a premium for that. So if you take the risk-free rate, 8%, subtract out 6.5, which is what the inflation rate approximately is, forgetting the base effects, the aberrations. The CPI today is about 6.5 if you look at the incremental.
But trending down.
But has been trending down. Whether it's stabilized or goes down further, we have to wait and see. But given it's 6.5, the real interest rate is 1.5%. So we're telling you, give your money to me, right? Don't use it today. I'll give you 1.5% real for that benefit. Is it too high? It's about what it is in the rest of the world. It's not higher than the rest of the world. This is where the world is.
Bad news for everybody?
No, I'm just saying that
there is a feeling that for the global story on India, we need a boost on our growth, because at the moment it's really flagging and people are beginning to give up a bit.
I am aware of that. I think there are a number of factors which go into boosting growth. Some of them are government policies. Some of them are the external environment. We've got a boost coming from lower oil prices, which make our inputs cheaper and therefore our profitability of our enterprises higher. Interest rates are just one aspect of that. So while they're not unimportant, I'm not denying the fact that when the Reserve Bank turns, it will be a positive signal. But I think that we should avoid scapegoating the Reserve Bank and saying, you're the guy standing in the way of growth. There are many other factors which are needed to make this happen.
Would you like to wait to see what's in the budget and see whether there's fiscal consolidation, or you will work independently of that?
As I said, wait for the next monetary policy or whenever we do.
Too tough, I must say. Two things you'd love to see in this budget.
I think one of the things that the government has emphasized is that it's going to stay on the fiscal consolidation path. I think that is a very strong signal to the investors, but also not just foreign but domestic, that that'll help both in terms of inflation but also interest rates. One of the factors we've seen is government bond yields have been coming down quite sharply because of a belief that the government is going to stay on the fiscal consolidation path. That's one. I think broader, I think the expectation is of a strategy on what the budget often is a government plan. What is going to happen over the next year? What are the big picture things that need to be done?
One thing you'd like some
Well, of
signal?
course, one is already underway, which is GST. I mean, if GST happens, I think that it would be a tremendous benefit.
It's a
to
slightly
this country.
watered down version from the original, but better than current situation.
Let's move forward.
Yes,
Things will
yes.
once people
Slowly.
see the benefits, things will fall into place. But I
Right,
think
right.
GST would be a very, very important step forward.
Any questions on the budget or here?
Sir, my name is Komal Yadav. So my question is regarding the GST bill that you've talked right now. So since the GST is a destination-based bill, however, there is an additional 1% tax on interstate transactions, which is a origin-based system. So isn't it contradicting the very basis of GST? And what are your views? Because it is completely contradicting what GST actually means.
So first, I'm going to confess that you're pushing me beyond my
Pay grade.
not my pay. Yeah, well, actually my pay grade, because the central
welcome to the
bank
club, because I also felt the same.
is supposed to comment on monetary issues, not fiscal. So I don't want to comment on the details of the GST bill. Let me just say this, that there is a level of dilution at which it will be ineffective. But there's also some, tweaks and things that can be done where, let's get the bill and then let's move forward on bringing as much as we can
Right.
further into it. So
Not
long as we
perfect.
have the sort of clauses in the bill that can allow us to bring it in if and when there is consensus,
Right.
I think we can move forward.
So you don't have something perfect, but at least it's better than what you got now, and then slowly change it and get to...
I think that's been the pattern of Indian reform. If you look at reforms, Dr. Montek Singh Ahluwalia always used to say, get the camel's nose under the tent. Before you know it, the whole camel will be in, but let's get that camel's nose under the tent.
We've got a lot of questions on rupee weakening. Well, against the dollar, I should be very
Yes,
clear, because
yes.
almost
Go to
every
London.
currency has
Yes.
weakened against the dollar.
Right.
But nobody looks at anything else.
Absolutely.
Compared to the rest of the world,
Yeah.
we are just, in fact, we are appreciating it compared to many currencies. But against the dollar, because America is doing so well, a 5% quarterly growth rate last quarter is phenomenal. The stock market there keeps going up. So does this worry you? Because there was a feeling that you would try to keep it under 60, but now we're closer to 64, 65 than 60. So does it worry you?
Okay, I'll give you the mantra, then I'll explain. Mantra is we don't worry about
Nothing.
levels. We do worry. We do worry.
Thank God for that.
But we don't. We do worry about volatility. So we don't like sharp movements, but we're not trying to protect a particular level for the rupee. I think a number of factors came into play last month. One was, of course, dollar strengthening. Remember, dollar was at 79, the dollar index. It's moved up to 89. That's 12, 13% strengthening. If you look at the rupee today versus the euro, it's stronger today, significantly stronger than it was at the beginning of the year. If you look at it versus the pound, it's significantly stronger than it was at the beginning of the year. Yen, of course, it's stronger. So these are, the rupee has strengthened except against the dollar. So when we always look at it vis-a-vis the dollar, we have a sense of rupee weakness. Real effective, there has been real effective appreciation in rupee over the year. So that's one. Second, last few weeks we've had worries about emerging markets. We've had the trade deficit come out pretty sharp, widening in November. I think that's a one-off. I think it will narrow once again because gold imports will slow down, the effects of oil will show up, and our current account deficit will come back into manageable territory of 1.5 to 2%. But those things all came together, and there was some, and also year-end FIs tend to close their books, tend to sell and leave if they need to. And the rupee has done, the Indian markets have done pretty well over the years. So a bunch of people want to take profits. All these things are coming together. I'm not too worried about, where it is today. I think it'll find its level going forward. But as I said, we're there to prevent large unidirectional movements which are unwarranted by fundamentals. We try and reduce that kind of volatility, but we're not there to stabilize a particular level.
You have a question? Yeah, please.
So speaking, I am Sayam from SRCC. So speaking of the dollar, there were talks about internationalizing the rupee as such. And with Russia and China signing a deal to bypass the dollar, how do you think, on what priority list do you think does internationalizing the rupee and countering the effect of the dollar as an international currency stands for India?
I think we internationalize the rupee not to confront the dollar, but because over time when we do all the things we need to, the rupee will automatically internationalize. So internationalizing is not you wake up one day and say the rupee is now international. It means that you focus on deepening your markets, your bond markets, your derivative markets, your equity markets, so that flows can come in and go out without a problem. You expand the ability of people to come in as well as expand the ability of people to go out. And then you start saying, as your rupee gets held across the globe and gets traded across the globe, you start saying, look, okay, I don't mind you trading it, you holding it, you invest, you putting deposits here freely. So it's a process. It's not one-off. It's something that I think will happen as we do more and more. My sense is 10 years from now, we should see, especially if our economy expands much along the lines that people hope, 7-8% for the next 5 years, will be big enough for us to have an international currency. So,
tell me, the talk about the US bubble in the stock market, now it grew at 5%, as I mentioned in the last quarter. It's one quarter only, but it's still 5%. Is there still a chance for a bubble in the US market, and is there a chance for a bubble in the Indian market?
There's always a chance, right?
Yeah. What's the probability? High probability, medium, low?
I think in general the US is coming out as the strongest economy at this point. Right. And so people will flock to US equities because US companies are not just US, they're also spread across the world. Right. So they're a good governance play on the rest of the world. Right. So all those things will make the US look more attractive with interest rates as low as they are, and with the sense that the real growth of the world economy is still capped at a fairly low level for the next few years because Europe is growing slowly, China is slowing down. I think there is a possibility that interest rates, even as they rise, will rise slow enough to verify the expectations of the market. You won't get a collapse. That's the anti-bubble case.
Yeah, in a nutshell, are you saying there's a less of a chance for a bubble than what you would have thought, say, a year ago?
I don't know what I thought a year ago. Okay. So I'm trying to look. I don't think that at any point you can categorically say we are in a bubble.
You did once and you predicted it spot on.
No, I said there were practices in the financial sector which were very worrisome, which raised the risk. I mean, this is economists speak, right?
The economist way of saying there's a bubble, right?
There's a possibility.
And it turned out to be correct. So people do listen to you.
So what I will say now is that the danger, the risk, which will verify your bubble case, is if interest rates move up much faster, because capacity utilization in the US gets stretched, wages start picking up. They've been relatively flat, but nobody knows why they've been relatively flat. And if suddenly we reach capacity in employment and wages start taking off, you could have much stronger inflation in the US than we've seen so far. That could create the conditions for much sharper rises in interest rates, which then will lead to a sharp fall in asset prices. That's the bubble case.
Right.
I don't think it's the highest probability, but I don't think it can be ruled out.
Okay. And India? Our stock markets?
India, we still, I think, there is a possibility that we grow. I think a reasonably high possibility that we grow reasonably strongly over the next few years. So income expectations may in fact be verified by the actuality.
So no bubble for India. I mean, lower chance. Sorry.
Lower chance.
Always a chance. There's Madeline Crowell, American student. Here you are. Do you have a mic?
Basically, I was wondering, the 2008 housing bubble crisis that happened in the U.S., is India starting to see, with the sort of credit loans widening, is this a possibility for the Indian economy in the next few years?
It's a very good question. To what extent does lending get pushed? Sometimes because of economic compulsions, sometimes because of political compulsions, beyond where it should go. In the U.S., the problem was very low, equity to debt ratios for houses. You put in very little equity. At one level, it was 3% down payment to buy a house. We're actually going back to some of that in the U.S. once again. So those are reasons to be concerned that equity is really low. Similarly,
equity
in India,
to debt ratio means the amount the person puts in compared to the amount of loans he takes.
Absolutely. The amount the person puts in to buy a house relative to the loans he takes, typically we think 20% is a comfortable level. That's how much you should put up of your own money, so that you constrain the rate of growth of house prices. If you're buying with entirely borrowed money,
99%,
it starts going up, and what have you got to lose? Worst comes to worst, you walk away, leaving 1% of your money behind. So that is bubble-like.
Right.
Those are places where you start worrying. Similarly here, the question is, do we get over-lending at certain times? For example, in Andhra Pradesh, one of the concerns when we had the microfinance crisis was everybody was lending to the same person, whether it was the state-owned banks or the microfinance institutions, and people were borrowing left, right, and center merrily without thinking about how they would repay it. And there was over-lending, over-indebtedness, and problems thereof. So similarly, I think the question is, are we getting into a situation where we could have that? My sense is not just now. I don't see that. I don't see where that's coming from. So long as we're careful about constraining lending without adequate information, without adequate collateral, we will not go there. Going forward, one place we have to be very careful about is the tremendous infrastructure needs that we have. And we have to make sure new infrastructure projects are adequately capitalized with enough equity for the kinds of risks that emerge in that area.
So in India, I think, just to clarify, are people putting enough of their own money? Are they putting 20%, or are we generally we borrowing too much to finance, say, real estate?
So for very low income housing, it's 10% down payment. But for the houses that you and I would buy, it's 20%, and sometimes goes up to 25%. I think that's reasonable because much of it is our own money. People find it very hard.
And the other probably thing, the horrible part about India is the black money.
Yes.
But that's their own money.
Exactly.
So maybe that adds to the 20%.
Well, I didn't want to say that, but that is an additional cushion in some areas where you have this.
So it's 20% of the white.
The value is 20% of the white rather than 20% of the overall value. Of course, black money is coming down. We need to bring it down more.
Real estate, it is coming down substantially. There's a question from Jagannath of St. Stephen's. Yeah.
taking a cue from you saying that the Indian rupee is appreciated with the yen or the pound itself or the euro, we have a situation where there's some sort of competitive QE taking place with the Japanese bank standing where it is, ECB probably going in next year, and obviously US stopping it. Are we looking at a neo-currency war where we have the more advanced economies trying to compete against each other? Two-part question is, one, is that a possibility? And two, in that case, will we as an emerging economy look at something like quantitative external leasing that you spoke about in Brookings? Will we start operating in the exchange market and say, let's say, stabilize the rupee in that sense so that we're still competitive in the international market?
It's a very good question. I think that the industrial countries, one way the very accommodative policies work, in fact, the primary way may be by weakening the currency rather than by necessarily, making interest-sensitive sectors of the economy respond with higher investment and higher purchases. The demand side effects aren't happening as much as the effects on the exchange rate and the effects to some extent on asset prices. People feel wealthier because prices are higher and then go out and spend more. There's a little bit of that, but the exchange rate effect, to my mind, is one of the bigger effects. How do we respond? Well, what happens as a result of all this is we have ton loads of money coming our way, and we have to be responsible in using that money, which means that we shouldn't use it if we can't use it properly, which is where keeping a tighter fiscal deficit so that we don't overspend based on borrowed money is important. I think we are a country which is capital short. So if we can use that money more effectively over time, especially longer term money, we should do it. So we are trying to encourage FDI, so it comes in responsible and longer term ways. We're trying to discourage very short term debt money, and we've put in place constraints on that. I don't think it's feasible for us to maintain a exchange rate over the long run that is not consistent with the broad forces in the market. So, for China, what it did over time, people kept complaining the renminbi was undervalued, involved a tremendous amount of financial repression domestically, keeping interest rates really low, even while for depositors, while buying tremendous amounts of dollars. We can't do that. We can't keep interest rates at a level that we want, given where the financial system is. As I've said, we've accumulated reserves, but I don't think our objective is to accumulate $3 trillion worth of reserves.
China's 3 trillion, yeah.
3 trillion right. Plus.
Just before I open it up to a free-for-all, just to clarify on your excellent speech, which is of course hit the headlines, about not only make in India, make for India. Because the growth rate, we reached what's called a new mediocre.
Mediocre.
The new mediocre, the global, at least the West is going to go through a very much slower rate of growth. That's the new mediocre. So don't rely on them. But doesn't the size of the countries matter, the size of those markets? You add 5% in the American GDP and sliding like another India. And while India may grow at 9%, 8%, 10%, it's still a small economy. So did you mean, and I just want to clarify, create the conditions and let an entrepreneur decide whether he makes for India or makes for international? Or did you mean only make for India?
No, so it was make in India largely for India. Largely was a word. So first, it wasn't against make in India. Yeah. Let's create the conditions to make in India, whether it's manufacturing. This was not a speech against manufacturing. It was let's focus on...
Not a speech against e-commerce.
Not a speech against e-commerce. Not a speech against services. Let us create the conditions and let the manufacturer, the producer, the entrepreneur, many of whom might be in this room, decide where they want to go. And we've seen when our computer industry, our software industry, decided to go in a direction, it produced miracles.
Right.
And let somebody else decide. They made.
But the software did make for international, right?
They made for international. So
yeah, because the size of the market.
The second part of the speech is not saying be pessimistic about exports. In fact, there's a word in there, I'm not an export pessimist. I think where we can find a comparative advantage, we do magnificently, whether it's in business process outsourcing or whether it's in pharmaceuticals, we will find our niche. essentially it's a speech against industrial policy of the worst kind. There are some industrial policies which are reasonable, but the kind that to my mind is now not possible, which is undervalued exchange rate, export champions, these are the guys who will get benefits, these are the guys who will take us forward. If we do that, we run the mistake of believing the world was as it was when those guys moved forward, and that the world will be as hospitable as it was when those guys grew. And I'm saying, no, because the rest of the world is growing slowly, let's be a little careful. But by all means, it wasn't against exports. If you can export, great. If you can manufacture in India, great.
Yeah, but I do remember interviewing Lee Kuan Yew once and said India missed the boat. When we got there, the highway was empty. Now the highway is packed. So you have to change and take that into account, I guess.
Absolutely. And figure out how you build a separate highway.
Yeah.
And what that separate highway is. And my sense is there's a lot the government needs to do, a lot it's embarked on. This new, reducing the amount of business regulation and entrepreneurs to face, tremendous idea. Financial inclusion, tremendous. Let's do all these things and then see what happens. And our people, we have plenty of entrepreneurs, they'll create magic.
Now the lazy ones who didn't put in their questions are now coming in. The young lady in the middle there, in the middle of the fourth row.
Hello, sir. With the new government coming in and a lot of promises made for India's economic development, the recent mid-year economic review, spoils all that. It does not give very good results. I mean, in spite of October being the festival month, the industrial output, especially of consumer goods, has been shown to be very low. The trade deficit has widened. There is a dip in the private investment. So how do you propose to plan for the remaining part of the year so that the overall financial report is answerable to the promises which were made?
Well, first, I think 6 months is short in the life of any country. It takes a long time to get things, back fully on track. That said, I mean, be a little careful about putting too much weight on the October production numbers. October had many holidays. I don't know how many of you sort of spend most of October worrying, when are we going to work?
Nobody worried about that. Yeah. Only you.
Well,
but it's year on year, so same thing in last October.
No, but this October had more holidays than the previous October.
But
so
1%, isn't it dismal? It's really
some of
worrying.
that will get cleared up. Also, our statistics. I mean, you must have heard this from many economists. Our statistics leave much to be desired. I think our statisticians fully aware of it, trying to fix it, but there are issues.
No, I
there.
Also heard that the tax regime and this, like for example, on Nokia, they had to shut down a factory which 55,000 workers had to go because of some retrospective tax. And that has affected, in fact, even the industrial...
Well, also because that is the factory we look at to assess the production of that particular sector.
Oh, I see.
When in fact there are other industrial factories, but they haven't been included. Those are issues with the statistics.
That's a wrong statistic.
Those are issues. Yeah. But all in all, I would agree that we are not sort of in a phase of strong growth as yet. My hope is, as many of the factors which are under play come together, including some of the work the government is doing, we will see pickup. Now remember, I mean, we have had previous periods when governments have done a bunch of reforms and growth has taken time to pick up. You've kept saying, where is the growth? Where's the growth? We're reforming, no growth. It's not instantaneous. There are delays between when, even monetary policy. Monetary policy has, in the famous words of somebody, I don't remember who, but long and variable lags. Cut interest rates today, the effects show up 3-4 quarters down the line. In India, typically 3 quarters.
So when you cut them in the next, then it'll show up 3 quarters later.
If you say so, yeah.
Young man, yes. Can't get a headline on interest rates, quite rightly actually.
I'm Nilesh Basuroy and I work as a researcher with eCareer and I graduated from SRC this year. So I have a broad question for you about the inherent structure of capitalism. There are a lot of questions recently which have been arising about like Thomas Piketty's book talked about the concentration of wealth in a few hands and how the subsequent inequity that follows. And very recently a book by Naomi Klein said that, a book called This Has Changed Everything said that the profit-driven characteristic of capitalism will not allow us to protect the environment. So I would want to know, since capitalism is the most dominant form that prevails, how do you feel capitalism can evolve and address these concerns? concerns?
See, the word capitalism has bad connotation. I like to think of free enterprise. That is where everybody has opportunity, right? The concerns, I think, that have emerged over recent years is that a large fraction of the population doesn't have the capabilities to take advantage of the opportunities generated by a free enterprise system. They don't have the right education, they don't have the right health, the nutrition, etc. And in India, how many people are malnutritioned? And that has a tremendous adverse effect on your IQ and your ability to go forward in a vibrant economy. So I think we have to work on two fronts. That we have to make it possible for people to have much greater capabilities while preserving or expanding the opportunities that free enterprise gives. So at the same time as we work on expanding access to financial services, on broadening inclusion and so on, that's giving you access to capitalism. We also have to make sure when you get there, you have the ability to actually run a small enterprise, do something. So both those are extremely important. Now, some people say because it hasn't worked as advertised, let's shut down the free enterprise system. Well, we know how the alternatives worked. And if it involves Naomi Klein pricking out who gets the goodies, I'd rather be in this world.
Two more questions, I think. Yeah, one here, ma'am.
Good afternoon, sir. I'm Ishrita from LSR. Sir, one of the major sectors we need to focus is also financial inclusion. So we've seen how M-Pesas worked very well in one of the African countries, Kenya. So how well do you think can a concept like M-Pesa work in India, and what is its scope?
So we are trying to actually bring about not one M-Pesa but many M-Pesas.
You'll have to explain that for the
M-Pesa is an electronic money. Actually, it's not electronic money. It's a way of transferring money from one phone to another, one phone account to another very fast, and then building on that variety of financial services, including the Kenyan Central Bank governor tells me today, loans. So a lot can be built on that structure. Now, we have the possibility of doing that. In fact, we have M-Pesa. It's a Vodafone trademark in India today. But partly because the cell phone companies have not cooperated as well as we would have liked with the banks, and I don't know where the difficulties are, and I don't want to ascribe blame, it hasn't taken off to the extent that it has taken off there. Today, however, we're seeing the advent of more cooperation between the banks and the cell phone companies, but we are also in the process of licensing new entities called payment banks, which can basically do that kind of stuff by themselves and don't need alliances. And some banks are interested in opening payment banks, some cell phone companies are interested in opening payment banks. When that happens, over time, I think we will get to a situation in the next few years, I'm talking 2, 3, where your cell phone is your account. And not just for people with smartphones, but people with ordinary phones and across the spectrum of people in the country. So I think we're on the verge of a revolution in the combination of telecom and banking. And I think these payment banks will play a part, as will the regular banks and telecom companies.
That's wonderful to hear, and the RBI will encourage this.
Well, we're waiting for people to apply for licenses, and there are a variety of people who've shown interest, and we hope to license them quickly, as well as create an environment where they can expand as fast as possible.
Excellent. One last question here.
Thank you, sir. My name is Arjun. Sir, over the last very arduous election year, the public sphere has been transformed more towards big business, FDI in the big sectors, the manufacturing, the infrastructure. Don't you think that for any free economy, as you and I envision, the focus of the public has to be towards entrepreneurship? That the focus has to be towards small localized businesses rather than this big business bailout kind of a thing that we have seen over the past few years?
Well, I agree that we have to create the environment for all businesses. And the best businesses are the businesses that start small and grow big, that don't stay small. because as they grow big, they employ more people, they create more job opportunities, and they can do more things more cost effectively. So absolutely with you when we say we have to create the environment for entrepreneurship, which means business regulation, finance, but also getting a cadre of people you can hire when you open your business, people with the appropriate skills. So to that extent, I see no difference between working on all these areas more broadly for the existing businesses, for the small, for the big, as it is for working for entrepreneurship. I think it's the same thing, that we have to create a business environment that allows people to start up and grow. I don't think there's something specific to small guys who haven't started as yet. I think so long as we create that environment, we will see the effects.
But carrying on from that infrastructure, you need to boost the growth rate, which the RBI really can't do. But you have a problem where many of the big businesses that are required for infrastructure are heavily leveraged, have got high debt, and can't really invest now, and maybe you wouldn't even like to see them invest. In that kind of scenario, it's tempting for people to ask the government, okay, for 1 year, throw fiscal caution to the wind and invest in infrastructure. Is that dangerous?
Well, I think there are some areas where the government can direct flows. Railways, for example, we need massive investments in railways, and we know where they need to be done.
Right.
So there, if the government draws in money in some ways, that's not a bad thing. Does the government have to build every railway line out or every? Not necessarily. It can, there are very many effective examples of alternatives in this country. But I think it would be a mistake in general for the government to take over the entire business of infrastructure at this point because they are heavily indebted.
Because the private sector is indebted.
Because the private sector is indebted. Instead, it may be better to try and work down the debts of the private sector, coax entities to sell what they have to sell, and, at the margin, maybe the government could take up some projects, but I don't think entering in a big way by itself, it left that area many years back for good reason. To re-enter and forget the lessons of the past may not be the wisest thing. But there is scope for reducing the debt load, getting these firms to bring in new equity, getting them to sell off some assets which are functioning. Right. All those things need to be done.
Work together, get rid of their debt, and get them to invest in infrastructure rather than the government.
Because they built expertise.
Yes.
Some of them are building airports across the world.
Yeah.
Why can't they build more airports here? And can we get them
railway stations?
Or railway
whatever.
stations, absolutely.
So 1 year from now, India's growth rate over 7% or under 7%?
I'd be happy if it's in the middle sixes at that point. Middle sixes.
And inflation, you'd be happy if it's minus 20%.
No,
5%. You've got a 4 to 6% target.
Yeah.
But middle sixes next year and year after?
I would hope that we certainly touch 7. Beyond 7, I think depends on how much we do in terms of serious sort of restructuring the framework of the country. And I think things are underway. Let's see how they play out.
Round of applause. Wasn't that amazing? Thank you very much indeed.
Thank you.